Welcome to our live streams. This is where the grown-ups trade. No hype, no flexing, no TikTok guru nonsense. Just focus, discipline, and respect for the craft. Here we trade gold, the oldest store of value on Earth, at the precision scalping level. That's where trading gets real. Where a single tick too early or too late decides everything. It's the hardest style of trading there is. And the highest form, too, because it demands mastery of mind, structure, and emotion. Execution over ego. Reaction over prediction. Can it be the most lucrative? Yes, but only for those who earn it. There are no shortcuts here. You can't fake discipline at 10-second speed. Most gurus out there sell you dreams from their demo accounts. We build traders who can survive the market on their own terms. We don't promise easy wins. We teach you how to build a system that doesn't break when you do. If you're here, you already know what that takes. Courage, grit, gumption, the willingness to get punched in the face by uncertainty and still show up tomorrow with your rules intact. Because precision scalping isn't just a trading style, it's a mirror. It shows you who you are under pressure, and it forces you to get better, not just as a trader, but as a person. The focus you build here, the emotional control, the ability to act without hesitation, those are life skills. They translate everywhere. So welcome to the Barcelona Trader, where we practice the hardest craft in markets and one of the most rewarding in life. Let's get to work.
Good morning. Good morning. It is May 4th, International Star Wars Day. May the 4th be with you. And we're here to trade the Barcelona with the Barcelona Trader. That's me, to trade the new session. Trading gold and gold futures. We're looking right now here at a 1-minute chart. We saw this massive drop here from about 45.79 all the way down to 45.26. So more than a 50-point drop there. And it has now bounced back up. Of course, not reaching the highs where it started from, but that's been quite the move going on so far this morning, given the fact that it's a bank holiday throughout Europe. I'm surprised to see such a big move. I guess it doesn't look that big if you look at it on a 5-minute chart. Came down from here, bounced. Here we are back up, probably coming back down again here to the DM1 maybe. Maybe that's what's going to be happening here in this session if we have some bullish moves. There's not a lot of choppiness there. Of course, that's on this chart. We look at MT4, we might see a different story. Oh, what happened to MT4 here? There we go. Okay. One thing at a time. All right. Well, yeah, we are in a bearish market, bearish trend right now. Let's change up what we're listening to a little bit, okay? Not this. Maybe a little this, or maybe this. There we go. Yeah. Okay. Well, let's take stock of where we sit. I'll remove the indicators from here so we can have a little bit of a look-see. Got the pivots here. So we came down through the MM2, through the WM2, and through the DS1, even wicked down below the DM1 here before ultimately bouncing back up, pushing back up above the WM2, the DS1, and the MM2, all sitting right there, but ultimately that forming a barrier that it wasn't going to get through on the way up. So we're still in a bearish market here. This has been toppling over. The question is now, are we turning around and starting to make higher lows? Or are we going to come back down here and make a lower low? All right, I like to put price in a box when we get started, even though today isn't isn't a exemplary day of how we put price in a box, because it is moving, and usually when we show up at the charts, price is no, why isn't my box showing up over there on the other chart? Let's see. There we go. Okay. This is the 1 minute chart, so this is where I'll make the adjustment. That's going to be the top of our range. We are at the bottom of our range right here. That range is 62 to 53. It's about a 9 pip range. That's a bigger range than I usually like to have, but that is what it is. Let's spread it out to make it look like a 9 pip range. Otherwise it looks too small. Okay, it is only 7:45 right now, so we do have some time to, you know, take a look at what's happening, what's going on here. All right, we have the dollar in this red hot moment is pushing up a little bit, but after a few bars of, you know, it's consolidating here. We have been pushing up since London. So I'm not sure what's going on here. We have another one of these days where my screen isn't moving, don't we? Just seeing that. I will fix that. There we go. All right. Well, anyway, let's go back to what I was saying before. This is a 5 minute chart. We can kind of see around 6 a.m. or so. Price fell off a cliff here. There's probably some Truth Social announcement or something like that, or what was it? The Iranians announced that they had shot two U.S. warships. That might be what's going on there. Let's see what it says here on Financial Times. Iran warns U.S. Navy against entering Strait of Hormuz. Oil surrenders some gains after Washington denies claims that Tehran had struck an American warship. Okay, so America is saying that Tehran did not strike an American warship. But who knows who you can believe in this environment? First casualty of war is the truth. All right, so anyway, we have the dollar pushing up after London. We have 10-year U.S. Treasury bond yields pushing up as well. So all of that kind of signals a downtrend for gold. We are still in the box. Box which we are calling Monday, New York opening range. There it is. All right, let's open the Zoom room. Yeah, we're getting a little bit of a push up here. It is 9 minutes till we have that 8 a.m. candle. All right. Let me pull up my trade journal. Bear with me just a moment. All right. That is done. All right. What do we have here? It is NFP week, right? So on Friday of this week, we have non-farm payrolls. And that is really going to impact the market this week, barring other influences. If it were left to its own devices, it'd just be a lot of algorithmic trading. People really waiting to see where non-farm payrolls land before making their next big bets in a direction for gold. Yeah, our analysis says, if you're staring at your glass this morning, wondering why the tape is moving like a zombie through molasses, you can thank the calendar. Today is the early May bank holiday in the United Kingdom. London, the physical gold trading capital of the world, is currently at the pub. When the London session is closed, the critical New York-London overlap volume vanishes. We are left with an anemic, highly algorithmic COMEX tape that is prone to wider spreads, false breakouts, and random low-volume stop hunts. Here's your strictly fact-checked low liquidity blueprint to survive the Monday chop. All right, so we're going to talk about this for a minute, since we're just waiting for price to get out of this little zone that we're in right now. All right, what we're looking at here is a minute spot gold chart. We see that we are under the WM2 pivot. We are within a channel that is broadly in an uptrend on the 1 minute chart anyway. On the 5 minute chart, it is in a downtrend. On the 15 minute, it is in a downtrend, and on the hourly, the hourly, it is kind of in a neutral trend, slightly uptrend, but yeah, so not a lot of confluence between that indicator. Anyway, you see where we are. Price just barely moving, and I'm going to go ahead and keep reading this. I'll keep my eye on the chart, but let's just kind of go through the analysis, which you find on our Facebook page. Okay. All day, UK bank holiday. London banks are closed. So 10 a.m. Eastern time, we have US factory, which is a yellow folder, won't really affect us. 11:50 a.m., we have FOMC member Williams speaks, yellow folder, probably won't affect us much. At 1 p.m. today, President Trump speaks, and that probably will affect things. But the question is, are we even going to be trading at that time? There's kind of a unlikelihood of that. Let's see if that's still on the calendar today. Oh no, that is off the calendar. Okay, so I must have been looking at the wrong day for that. Yeah, my mistake. All right. Got 1 minute for 8 a.m. All right, so there's our 8 a.m. Session begins officially. All right, we had to update our market analysis on Facebook. Okay, so let's go back and see how things have changed. Hello? All right, sorry there, I had a call from the pharmacy. Okay, let's see here. I took a sell here. I'm 12, running 12 negative right now. $27 negative, 24 negative, 30 negative. May have gone the wrong direction here. I believe I did. Let's give it just a moment to breathe. It's 8:07. I think I'm on the right side of the market here, but it is not confirming that for me right now. In fact, it's telling me the opposite. Okay, 39 negative now, down from 60 something. 33 negative. 45 negative. $30 negative. 33, 36, 27. 12, 3. 3 positive, now down to 0. 3 positive again. 18 negative, 15 negative, 3 negative. It's hitting some support that is it's not letting it come down, even though algorithmically it seems to want to come down. Let's find its support. $8.10. Seems to be gathering steam to the upside. The dollar is trying to come back up, so we're pushing gold down a little bit. That's giving me a little bit of hope that we might come down to at least a base saving exit for me. $105 negative. See, now, of course, in hindsight, definitely should have gotten out. We're at the MM2. and the WM2 and the DS1. And so I'm betting we're not going to be able to push through it very far to the upside, and that we will have to come down. But the dollar is weakening, so that's not helping matters. Okay, that is my loss limit, so I'm quitting. Sometimes you're the windshield, sometimes you're the bug, right? That would seem like this is really going. All right, I just had to get out. You know, I got on the wrong side of that. I let it, but I didn't let it go too far against me. I took it to market structure. But that is all I'm willing to lose today. So I'm going to cut it off right here. And I'll see you at 7:45 p.m. this evening. All right. Have a good one.